Good morning to you. Thanks for your company this Wednesday, the 30th of September. I'm Jessica Amir, a market analyst with Bell Direct. Well, after 3 days of US equities charging ahead, investors took a breather last night before the first presidential US debate takes place at 11 a.m. Sydney time today. Now, what was noteworthy was that US stocks fell to their lows for the day after the New York City mayor said that New York daily COVID-19 cases are back above 3%. For the first time in months. Now, this spooked airline investors and saw airline stocks lead the decline. American Airlines, United and JetBlue shares all fell about 4% each. As for how the broad indices wrapped up, well, the Dow and the broader S&P 500 ended 0.5% lower, while the Nasdaq slipped 0.3%. Now, despite all this, a beaming light came through in way of better than expected economic news that the market really seemed to ignore. Now, it was US consumer confidence data that surged to its highest level since the start of the pandemic, with confidence levels seeing their biggest rebound in 17 years. Quite reflective that Americans are optimistic about the US recovery being on track despite being a bumpy road. Now, what to watch today? Well, the Aussie share market is eyeing a fall of 0.9% or a dip of 56 points ahead of the first of three Trump versus Biden debates. Another thing to consider is its options expiry, so fund managers and investors will be unwinding their positions, and now this will add to the volatility today. Add that to a bevy of companies going ex-dividend yesterday, and it's easy to see why markets have been so volatile this week, with the market hitting a new 3-week high yesterday before ending flat. But it should be a positive day for gold stocks given the gold prices lifted 1% for the second day. It's now $1,903 an ounce, with COVID cases rising in Europe, lifting the precious safe haven metal commodity. And maybe expect oil stocks to come under a bit of pressure today given the oil price has lost almost 4%. It's back under $40 a barrel. What else to watch? Well, ASX holds its AGM today. Freedom Foods FNP is due to hand down results. And this evening in the US, GDP growth data is released. The market is expecting second quarter growth to fall a massive 31.7%. And that's, of course, following the 5% fall in the first quarter. As for trading ideas that may be worth a look, Corporate Travel Management, CTD, was upgraded to a buy by UBS with a new $18.70 target. Now, UBS thinks that CTD has been one of the strongest travel stocks. It's minimised its cash burn and didn't need to raise money in the COVID-19 trough, but did instead raise capital for a business-changing North American acquisition that'll beef up its scale and earnings. So that's why CTD was upgraded by UBS as a buy. Now, secondly, the second largest mortgage broking firm in Australia, Australian Finance Group AFG, was initiated as a buy by Citi with a $3 target. Now, AFG controls about 40% of the mortgage broking industry, and a cyclical recovery looks to be on the cards given the deregulation of the industry, which will be detailed in next week's budget. Now, lastly, keep an eye on 3 stocks: shoe business that owns Hype and the like, Accent, AX1, engineering business, McMahon Holdings, MAH, and boric acid company, American Pacific Borates, ABR, all showing bullish charting signals according to Trading Central. Now, of those, Accent, AX1, their fundamental calls almost mirror what Trading Central's technical analysis is saying that its shares could rally to $1.95 to $2.01 over the next 25 days, as that's how long it took AX1 to form a symmetrical continuation triangle chart pattern. Bell Potter targets $1.85 for AX1. Morgan's is slightly less than that, $1.84. I'm Jessica Amir with Bell Direct. Thanks for your company. Stay safe, happy trading.